If you are a fan of Kaspa, you do not want to miss today's show as we are joined by three of the brightest minds of the Kaspa community. We have so much to talk about today. We're going to talk about Bitcoin, the ETF flows, why mining costs are skyrocketing, and how that is going to affect the price of Bitcoin moving forward. What makes Kaspa better than Bitcoin? What makes it different? We have the experts here to tell us. We're also going to talk about Solana MEVs. We're going to talk about the SEC, a shakeup happening there. What does that mean for the United States? And Donald Trump, is he pandering to audiences again, or is he truly going to be the crypto president? What does that mean for the cryptocurrency markets here in the United States? We're going to talk about that and much, much more in today's episode of Sin City Crypto. Let's go.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're the entertainment-focused cryptocurrency channel. We take old, boring, and stale information and repackage that thing up in a fun and sexy way. Bitcoin up to 66,000. I know we ended last week's show. We discussed potentially 63,000, 62,000. Is that what you said, David? Yeah. Either way, let's not get into what you were wrong about. Let's talk about where the markets are. We're heading back up to 70K. And today is also a good day. The president is having a secret meeting on Bitcoin as well. Did you catch that one?
I did not. Hopefully he'll remember what they talked about. Today's a very special show. Those of you that know us, that watch our channel, know that we have an actual studio, so we're not your average YouTuber. And well, what that allows us to do is bring amazing guests in studio to join us for the live show. And today is one of those days. I'm going to introduce our in-studio guest today. We're going to start first with the man himself, Shai, the co-author of Ghost Stag. Shai, welcome to the show, man. First time in Vegas, or first time in studio, first time on the show. Welcome.
Thank you.
How's Vegas been treating you so far?
So far, it's very hot and very arid, and the buildings are larger than the neighborhood I live in.
That is very true. We also have the creator of the Kaspa Logan. Some of you may know him as the Root Barbarian. I know him also as Chad. He is joining us in studio today too. Chad, how you doing, man?
Good, man. Thanks for having us, and good to see you again.
We're excited to have you. We also have Luke joining us. Luke is an ambassador from Australia for Kaspa. Flew all the way from Sydney to be here. We're excited to have him in studio as well. Luke, how you doing?
Yeah, I'm good, mate. How you going?
We're great. Just in case you guys didn't know, how did this all come together? We're in Austin, Texas. Rob and I, first day in the morning, we go downstairs in our hotel, and we're grab our breakfast, and we're getting ready to sit down, and I see Chad sitting down. He's got a Kaspa shirt on. I was like, hey, are you with Kaspa? He's like, yes, I am. We sat down next to each other. We broke bread together. We ate, and he let me know he was coming in town. I said, we would love to host you in studio. And so here we are. We're so excited. We have a lot to talk about today. I want to start, though, with this. 4th of July is coming around, and here in the U.S., if you're not in the U.S. watching, but here in the U.S., it's a pretty big day, right? Independence Day, right? How do we celebrate? We grill burgers and hot dogs. Unless your name is Chuck Schumer, who apparently doesn't know how to grill a burger or a hot dog, as he got absolutely lambasted for putting cheese on a raw burger patty. Now, there's only one chef in this room, unless you guys are chefs and I don't know. But Robin is a certified chef now.
It's certified chef, huh?
Yeah, or at least I assume. What are your thoughts on this burger technique here?
First of all, there's no such thing as a certified chef. You're just you either got it or you don't.
It's a buzzword.
Yeah, cheese on a frozen burger. It's interesting. Here's the thing. That was American cheese. It looked like, right? Which is actually not cheese. It's just oil with food coloring and some other weird chemicals to keep the whole thing together. Anyways, it's pretty much oil. So I love to oil up the burgers before I throw them on the grill. A little salt and pepper. Now a lot of people just like to throw that frozen burger patty. First of all, why are you buying frozen burgers? Just go. It's the same price. Buy the regular hamburger and just form it into a patty, throw it on the grill. No need to go buy a frozen burger. If you are going to get a burger, no matter what, throw a little oil, salt, pepper on there. And why put the oil when you can just throw that yellow oil on there? And then
spoken like a true chef. Yeah. Why buy frozen when you can make it everything hand by yourself? Anyone else want to comment? Shai, is this how you cook your burgers back home?
I do not cook burgers that much. I don't have a grill. I like cheese on my burgers, but I prefer it to be cheese.
Actual cheese.
Yes.
Not oil.
Yeah, and I like my burgers cooked. So I don't think I'll go for this kind of.
So you would not attend Chuck Schumer's barbecue party and eat his food.
The sausages look reasonable, I guess.
Fair enough. I can't. I don't know if you don't cook because you can't, but I can't cook barely a Pop-Tart. All right. I do want to talk about. I want to talk about this. This was okay. So, you know that song that lady that was like, "I'm looking for a man in finance, trust fund, big M." So we have a Kaspa version of that, and I want to play it for you. Very interesting. And so here we go.
Hi. Yeah, I just left the site, and I don't know. Am I asking for too much? This exchange was really big, and it was a tier 1, and I was super impressed about what it did. But I don't know. I think all I'm looking for is...
I'm looking for a Kaspa on Binance. Tier 1. Go live. New highs. Binance. Tier 1. Go live. New highs. Binance. Tier 1. Go live. New highs. Binance. Tier 1. Go live. I'm looking for a Kaspa on Binance. Binance. Binance.
You know, I want to ask you, Chad. So you're the marketing director for Kaspa. I did not know this, but you actually created the Kaspa logo. Pretty cool stuff, man. Thanks. A logo that you see anywhere and you immediately think of Kaspa. But I want to ask you more specifically about this Binance listing. We did do a video. I have some friends in the space, and one of my friends had told me that, hey, look, Binance is in the final stages of listing Kaspa. They're just going through their due diligence and whatever else they need to do. But we were kind of briefly speaking about this prior to the show, and I kind of asked you, I said, hey, when you have projects like Kaspa, when you have projects like Bitcoin that don't have a VCs pumping, that don't have a lot of money they raised, that was a fair launch, how do you go about getting the tier 1 listings? And you shared some really good insight. I'd love for you to maybe dive a little deeper into that for the people watching.
Yeah, we've been around for 2.5 years, and we're on many exchanges. Early on, there was a need to pay for some, but those were all community funded. So there's no treasury. We just asked the community, hey, do you like this exchange? Here's the listing. We do negotiate and try and get the price as happy as possible for us. But probably pretty early on, we decided that we're not going to pay for exchanges. And it's been great. I mean, projects come to us and just say, we want to list you or integrate. And we bring devs together and we create little groups, and it just happens. I mean, it takes time. Kaspa's not a copy-paste code coin. So it takes a little more effort to integrate. But yeah, we're well known to crowdfund and to be community funded in everything we do.
And I'm just curious, do you know what the downsides would be for a competitor crypto that would pay for an exchange listing? Do they have to provide a bunch of tokens at discount, or is it I'm not sure if you can speak on that, but just kind of curious, like what gives you the advantage of saying, hey, we're not going to, because obviously you had to have an internal conversation with the team and be like, hey, you know what, let's not go this route of paying, or maybe the business model didn't even offer that as an opportunity, as an option. But is there a downside for, say, a competitor that would pay to get on an exchange?
I don't know. I don't know. You guys have any comments on that?
I think that I don't think there necessarily is a downside to it. I think it's one of the things that makes Kaspa unique, right? We get the opportunity to say, no, we're going to break the mold of the typical sort of, pay to win sort of scenario. Hey, we're going to pay and put ourselves out there, but we instead want to do things differently. We want to shake it up, So
I think if you manage to get for free by your own merit something that people usually have to pay for, and they shouldn't have to pay for, because being on an exchange is supposed to be like some sort of a seal of quality. Like the exchange trusts you enough to let their users invest in your coin, and it's not like that anymore. It becomes just another way of monetizing a project. So I think if we are able to break this mold, it gives us like this special status of this coin that managed to go through this, what I find to be a very a skewed business practice. And I think other coins also want to prove that they're able to do it, because to get listed, not because they paid this huge chunk of VC money, but because they were inevitable.
Yeah, I always kind of hear people draw comparisons with Bitcoin and Kaspa, and obviously Bitcoin never paid to get listed on an exchange; just happened organically. And so that's something that always popped in my head. I'm like, oh, maybe they're taking that kind of that Bitcoin route when it comes to getting liquidity provided from the exchanges or to the exchanges.
Yeah, it flows into our whole marketing strategy. We don't pay. There's no contests. There's no rewards. There's no airdrops. Like we don't use money to buy stuff and get on exchanges. We just the code is awesome. The tech is great. The community is amazing, and so we've been able to do that after 2.5 years and be where we're at. And it's a community-centric project, so we've proven that you don't need to pay and shill and have other people say great stuff about you because you gave them money. Yeah. Like that's just feels icky. So we're in that boat. Where it's like, no, we'll invest in our community. Our ambassadors, our people, will equip them and let them be the KOLs. Like we're all KOLs, right?
Yeah.
That's a good point. And I think as the space grows and matures, because we don't have a shortfall of people launching projects, whether it's a pump and dump, they're trying to extract value out of the communities, whether it's their own community or some other community. But when you have projects like Kaspa, like the ones that don't have that kind of funding, that don't pay for the exchange listings, and these exchanges do it because A, it's good for business, and B, the community and the users are there, I think that says a lot more about a project and their long-term vision than just launch it. I mean, because you see tokens launch and then immediately you get listings on Coinbase, Binance, KuCoin. Other projects like Kaspa that don't do that, yes, it might take them a little longer to get that liquidity access for the average user. But guess what? If you build a badass enough project, people are going to find a way to get to it themselves. Or they're just going to wait, and when that time comes, you got to decide whether you're might be too late or you're still early. I want to shift this conversation to I want to talk about the Bitcoin ETF flows. So brutal week last week, as we saw outflows in 4 of the 5 days last week. 3 of them were 2 days were over 200 million. One was close, which was Friday, $189.9 million of outflows for BTC. With Fidelity leading the way at 80.1 million, Grayscale had its second consecutive day of $52.3 million of outflows, which brought, again, our cumulative total to around 190 million of outflows. I kind of want to ask Chad and Luke here, what is your guys' overall gauge on the sentiment of the crypto investor, the crypto markets? Think we all talk about we're in a bull market, and prices aside, what is your gauge on the sentiment? How people are feeling? Are they bullish? Are they bearish? Can they not believe that we came out of a bear market and we're in a bull market? What are your thoughts, maybe from personal experience, if you want to share any anecdotes? I know, Luke, you're from Australia. Chad, I don't want to dox where you're from, but you're not from the U.S. And so just to get a global view of how people overseas are feeling the sentiment. Luke, I'll start with you first. Well, what's kind of your gauge there?
I think the gauge, at least that I can talk about from the Australian perspective, is there's a lot of really positive sort of aspects that we're seeing, right? So we're having a lot of events in Australia. There's a really huge crypto convention happening at the end of the year, and the things that I'm seeing online from the community is amazing. I think it's really positive. So sentiment-wise, I think people are cautiously optimistic, and that's what I'm seeing. Yeah.
What about you, Chad?
Yeah, I mean, I'm kind of in the same boat with most of these guys here. We don't generally talk about price and I've been in cryptos. I'm pretty late to it. So, but in the 7 years, I've seen quite a spike in education, adoption. My kids are into it. Like, so I think the sentiment is changing and rapidly these past 6-7 years that I've been in it, where we're seeing this idea of real world adoption. And so that's what excites me when I think about, what's changing in people's minds. And I think it's the ability for them to see digital currency is here. It's even though we've had scams and we've had exchanges blow up and people go to jail, they can look at the overall landscape of finance in general and go, that happens everywhere. And so there's a growing trust for projects, and I think Kaspa is one of the ones that people are really attracted to, and they respond to the project's I don't know what you want to call it, ethics or ethos,
right?
That's different than other projects. we're very transparent. I think the team presents itself in a way that's like, if you ask us a question and we don't know, or we'll be like, we don't know, like, you know, and we're not hyping things. Like I always say, most projects are all about hype and, you know, paying for things. We're about creating buzz, and that means we do it organically, and you know that happens. So I think there's a buzz happening about blockchain in general, crypto, and we're in a good time. I think we're in a good time for the project.
You know, you bring up a very interesting point. I think a lot of the issue with people grasping cryptocurrencies, it's not tangible, right?
Mm-hmm.
Dollars, I can go withdraw dollars and it's tangible. I can hold it, right? Gold, I can hold it. And so as people start to see blockchain technology and cryptocurrency integrated with their everyday lives, whether it's going to the doctor, or whether it's buying a movie ticket or buying a sporting event ticket, thing, as more and more people see that in their daily lives, there might, you know, that might be that tangible thing for them. And so you bring up a very intriguing point. Shai, what are your thoughts? And do you have anything you want to share on this topic?
About the ETF, I don't have a lot to say. I don't know a whole lot at all about TradeFi. I do think it's interesting that you would describe a dollar as more tangible than crypto, because essentially they both represent similar things. Like a dollar is just like a portion of some abstract GDP or something. It's just like it represents the abstract ability to buy something.
Yeah.
It's supposed to abstract the value from the commodity. That's what money does. If you like, you're an orange farmer and you have tons of oranges, then you can sell them for this abstract ability to buy stuff later. This is the function of money.
Yeah.
So I think the dollars and or cryptocurrency is just a medium for that. It's not the abstraction itself.
That's a very good point. And, you know, I agree with you. I think a lot of, for a majority of people who maybe not even in the space yet, that will have to eventually come to the space, I think that's how they look at it. But I agree with you. All the U.S. government, all the dollar represents is, hey, we're backed by the U.S. government. Just trust us that we're not going to go bankrupt. And, well, it's not looking too good in the future. Robin, what are your thoughts? And I want to ask you more specifically on the ETF flows. The week prior, we had massive inflows. We saw Bitcoin rally up to 70,000. Last week, we had big outflow days. What's your gauge on where we are with these ETFs? And how, do you think the Ethereum ETF is going to help the Bitcoin ETF or hurt the Bitcoin ETF?
Well, the thing is that the asset managers that have run the ETFs, they are settling or buying and selling Bitcoin for their customers at the end of the trading day, and sometimes even 2 days out. And so if you're seeing the price drop, that means there's sell pressure, right? People are selling. And if people are selling, then if they're selling on the ETF, then the asset manager on the back end needs to go do the same. And so it's more of a delayed data set here. So when you see it, like tomorrow, if price of Bitcoin were to drop down to 63,000, we would expect in 2 days you would see some net outflows from the ETFs, because the ETFs at the end of the day, like we look at it as some magical thing that finance got going on, is literally just an order book on Wall Street, right? That's literally all it is. It's just an exchange, quote unquote, operates in a regulated way through the SEC. It's an exchange that operates on the New York Stock Exchange. That's really all it is. And the product here that's offered is Bitcoin. And so if the price draws down, there's obviously sell pressure. You're going to see outflows. So I wouldn't take too much I wouldn't flip out too much about it. Now, these inflows really just represent the market cap, right? In the same way that we would look at market cap on a traditional exchange or on like Binance or Coinbase or on one of these websites like CoinMarketCap, you look at the market cap, and that's the price goes up, the market cap goes up. And the same thing here for these exchanges. It's just, hey, we got inflows now, which market cap goes up. That's really all it is. So if you just kind of think of an ETF as an exchange, that's exactly what it is. But not your keys. Obviously, it's controlled by the asset managers. Now, when it comes to Ethereum, very excited about that. This is right around the corner. I know there's no hard date on when to expect this thing to be traded, but
July 2nd.
Is it July 2nd?
Yeah.
And so, this is, I think this is a paradigm shift for what we're seeing now. We got one ETF, the Bitcoin one. Remember, the first one got the first application got submitted back, I think it was in 2013 by the Winklevoss twins. And
the Winklevi. That's their plural name.
Yeah. So it was 10 years, right? 10 years or 11 years before eventually did get passed. And now we're obviously accelerating. We had that not even a full calendar year later, 6 months later, we have an ETF for Ethereum coming out. And then also you have people resigning at the SEC, which we're also expecting a change at the head of the SEC if there's a new presidential candidate elected or if the incumbent happens to leave, President Joe Biden. And so I'm starting to see that there's a shift here, at least in the United States, right? You have the Ethereum ETF, and there's going to be more to follow. And so once the Ethereum one's launched, I mean, how much longer? I would assume it's only months, right? Months before you get other commodity-like cryptos that'll get listed on ETFs, ones that are a little bit more decentralized or at least have been around for a while. I know that time in the market means a lot for the SEC. And, you know, we've seen the likes of Dogecoin and Litecoin be listed at first on new exchanges like Robinhood, for example, or some of these other crypto services or TradFi services that offer crypto products. They usually don't have a full suite of 100 altcoins. They usually go Bitcoin, Litecoin, Dogecoin, Ethereum. That's why I think that shortly after the Ethereum ETF, we'll probably see Doge and Litecoin. I know it sounds weird to think that we have a Doge ETF, but you know, I think that it's actually inevitable. You know, there's not a lot of centralization when it comes to Doge. I mean, say what you will about its utility, but realistically, you know, it's not obviously not going to go anywhere, and it's not that the contract is sound, right? It's co-mined with Litecoin. And so I don't know. I mean, I think we're shaping up to be a very interesting landscape here in ETFs, and who knows? Maybe we'll get a Kaspa ETF eventually. I mean, I think that you know Kaspa does check all the boxes. I know that I think a little more time in the market would probably make sense. I think maybe a few other coins, maybe Litecoin, Dogecoin, and then you know I think that you're going to have 50 ETFs eventually within the next 2 to 3 years.
At the very least, you'll have the basket of goods ETFs, right? Mid caps, low caps, high caps, proof of work coins, proof of stake coins. I think that's kind of where we're headed to. I want to talk about this this headline article, and you know, I had some questions when I read this, and of course, I'm not an expert in mining, but we do have someone very smart here sitting right next to me that maybe can clear up some questions for me, and I'm sure some of you watching. But this article reads, Bitcoin mining cost at $86,700, which, if you've been checking the price of Bitcoin, is higher than the actual price of Bitcoin. So right now, mining one Bitcoin is more expensive than the actual price is currently. I believe I have one thing highlighted down here, and no, I do not have anything down.
Wouldn't that be dependent on which ASICs you're using? Because I know, or is that just kind of the average?
I'm pretty sure this is the average across the board. But I wanted to ask Shai this question is, when we see discrepancies like this, Shai, and not necessarily from a price perspective, but when it's more expensive to mine, does that harm the network security, maybe in the short term, medium term, or long term? And what are your kind of general thoughts on how expensive it is to mine and how Kaspa is kind of making that different?
Yeah, I think it's very hard to even estimate how expensive it is to mine. I mean, it depends not only on the ASICs, it depends also on the type of energy you have access to. And there is this metric we talk about. It's called the CapEx to OpEx ratio. It essentially says how much of your expenditure comes from buying the hardware versus paying for the electricity and the energy. And these things affect the price quite a lot. And when I see just this figure, 86,700, I don't really know how it was computed, and it's really hard for me to derive any consequences for that, because it could be a consequence of increase in power prices. I know that energy prices took a spike in many places where mining is very popular, and so you might see this translate to a shift of mining to places which have more access to affordable or cheaper energy, which is, I think, a bad thing. It centralizes mining. I think.
So you think it's a bad thing?
I think that I can't tell you if it's a good thing or a bad thing, or it could be just a neutral thing. I just gave an example of one scenario where it is a bad thing. It all comes down to how this prices breaks down. So I don't know this particular datum. I don't know how it was obtained. So it's really hard for me, based on this really general statement, to derive a conclusion. But generally speaking, if we look historically at the graphs of the price versus the global hash rate, you see that they aren't extremely correlated. The global hash rate keeps increasing even when the prices are in decline. So it could be explained in several ways. It could be explained in speculation. People mine right now because they already have the machines. So if you already own the machine and most of the cost goes on the machine and not on the energy, even though according to this computation, to buy a machine and to mine is not as profitable as just to buy Bitcoin. If you already have the machine, it's still very profitable to keep mining, and assuming that the price is going to go back up. Now, if this kind of divide, this kind of huge gap between the mining cost and the value of the coin manages to hang on and to remain this separated for a few years, for something which is longer than the average lifetime of an ASIC, then I think you have a problem, because once ASIC will start dying out and living through their lifespan, you would see people not buying new ASICs, and then the hash rate would start to drop. But this kind of gap, for now, it seems to me a bit momentary. So I don't think, even if you see even like a few months where mining is like 20% costlier than just buying the coin, assuming you don't have machines already, it's not a very strong indicator to anything. So I'm kind of neutral about this.
Interesting. I want to kind of stay on mining, but I want to shift it maybe a little bit into the future. You just got your PhD. Congratulations, by the way. I believe in quantum cryptography, correct?
Mm-hmm.
Now, quantum is a word we're hearing more and more as AI becomes more developed, right? AGI and then like super intelligence. So quantum computing is one thing people bring up as a direct threat to mining, right? And cryptography and the safety of it. My question is with Kaspa, you are the co-author of the GhostAg protocol, right? So you know this thing inside and out. Is Kaspa future-proof for what we're going to see in artificial superintelligence and quantum computing? Is it already there, or are we working towards that goal?
I'm not going to say anything about artificial intelligence. I can say a few things about quantum computing. I don't think any proof of work is quite ready or future-proof for quantum computing. People have this conception that the only effect of quantum computing is that it threatens the signature schemes. So if we move everything to post-quantum signatures, then everything is going to be fine. And it's not quite as simple as that for many reasons. First of all, the current available quantum signature schemes, they are very inefficient. The size of a signature is kind of huge. And if you have low throughput, then you're in a problem, because it would essentially drive Bitcoin from 17 transactions per second to like 1.
Wow.
And another question is, what do you do with all of the money? Like, you have all of these old accounts, this P2PK huge wallets that their keys are arguably lost. And how do you protect them? How do you prevent a quantum adversary from stealing all of this money and basically toppling your entire economy?
Yeah.
Now, there are answers for this, but it requires going through the Bitcoin Max's worst nightmare, a hard fork. Right? You can't do this without a hard
Don't
fork.
say it. You're gonna turn people. Stop. I'm just kidding.
Yeah. Now, another form of threat. Okay, so just about this signature things, I think because Kaspa has much higher throughput, then it's much more suitable for implementing these signatures. I wouldn't rush to do it, though, because we don't understand them really well at this point. There are some cautionary tales about, one tech implemented a signature scheme called Falcon, which is post-quantum, and then it turned out there is a side channel attack on Falcon. It doesn't mean that Falcon is broken, but it does mean that if you want to implement it on a wallet securely, you have to use expensive hardware, which gives you something called fixed time floating point arithmetic. And if you don't have this, then just by listening to someone using the wallet, you can recover information about its secret key. It's insane, this kind of attacks, and it's really hard to expect in advance. And think that if they would have deployed wallets that don't have this hardware and a lot of money was on such wallets, they would be in a real problem. So we really need to understand these schemes better before we can use them. So I don't think there is a reason to rush this. Now, there is another more esoteric threat that people aren't aware of, which has nothing to do with cryptography. And there are some researchers that indicate that the mere presence of quantum miners affects the mining process itself. And it actually increases the orphan rates and harms the security of the network in ways that we don't fully understand yet. And over here, I have this very speculative idea that maybe Kaspa could also provide some benefit because in Kaspa we don't orphan blocks. However, it remains to be seen how this thing will affect the way we parameterize the protocol. There are a lot of technicalities here. But the good news is that the scale of a computer you need to actually meaningfully mine quantumly is much, much, much larger than what you need to break like elliptic curve signatures.
I always think of it this way. I'm like, eventually quantum computing will break a seed phrase, right? And how far out is it? And
quantum computing will never break a seed phrase.
You don't think so?
Never, ever.
No?
So like everything that uses hashes, like a seed phrase or most forms of symmetric encryption, it's largely quantum proof. Quantum computers don't have any advantage here.
Okay. So do you think that there is a vulnerability for Bitcoin to access a wallet somehow? If your
ECDSA public key is out there, whether if you used P2PK or you reused your address several times and then spent one of them, or if you spent to Taproot where the public key is on the clear, then a quantum adversary could take your public key and recover the secret key. They wouldn't be able to recover the entire seed phrase and go to your other derived addresses. They could just steal the address for which they know the public key.
Got it.
Is this going to be on the exam?
This is good stuff, man. I'm a nerd at heart, and I'm very technical, and I love learning about stuff. And you enjoy learning stuff like you're learning on watching the show. Make sure to hit the like button.
And then I was also curious, I know that there are a lot of parallels between mining with Bitcoin and mining with Kaspa. Obviously, two proof of works. But for someone that's kind of new to the game, doesn't know too much about Kaspa, what kind of sets them apart, or what are the similarities? Or what do you say when someone says, "Oh, hey, it's just like mining Bitcoin" when it comes to Kaspa? Or are there major differences? Or there's some advantages that Kaspa has with proof of work versus Bitcoin, or do you try to kind of stay to that same ethos that Bitcoin has, and why change it?
Yeah, well, again, I can also only speak for myself because it's a community project. Where people look at the emission schedule, Kaspa, they are often surprised by how fast it is, and they consider it a difference between Kaspa and Bitcoin. But I see it completely differently. I think that our emission schedule is closer to Bitcoin than any other emission schedule out there. And why do I say that? Because people don't use the correct axis. They look at coin emission over time and see that Bitcoin is slow and we are fast. But what you really want to look at is coin emission as a function of adoption. And what we were aiming for when we chose this fast emission schedule, the rapid emissions, is that by the time ASICs emerge on the network, we want most of the coin to have been circulated yet already, because GPU miners, they naturally spend a lot more of their mined coin than ASICs, because they have a lot more OPEX.
Right.
So they have to pay a lot more for electricity and cooling and this kind of stuff, and storage. So I think when you look at our chart, you see that the point at which ASICs emerge in the market is around the 65-70% mark, very similarly to Bitcoin. And it's much more similar than other coins where the ASICs emerged at the 10% marks, 15% marks, sometimes even already at launch.
And then, Shai, you and I were briefly discussing this, and we talk about Bitcoin's halving cycle is every 4 years. Kaspa not having, but it has a block subsidy reduction every 30 days. And I kind of asked you, like, what's the benefit of that versus doing it every 4 years? Do you mind sharing maybe some of that insight you and I spoke about?
I think what people don't understand about Bitcoin is that it started out as a math experiment. And when they came up with this reduction schedule, I don't think there was a lot of deep thought behind it. They just said, we want to make the supply finite. We don't want an infinitely inflationary coin. So they just came up with this formula and went with it. I don't think they ever thought that, at least not at this point, I'm talking about pre-2010, right? I don't think at this point they ever thought that Bitcoin is going to be like a multi-billion coin. And even if it did, they assumed it would be more down the line where the change in block reward is much smaller compared to the total circulating supply. And I think this is why we see these cycles. And I also think that people really expected the halving this time around because they thought it's going to have the same effect, and it didn't. And it didn't have this effect because at this point, the portion of the subsidy that miners get from blocks, the portion that comes from block rewards is much smaller compared to fees and the circulating supply, so it just doesn't have this effect. So this whole 4-year bull-bear cycle is a thing that is going to fade away. And I think if you're already aware of the fact that your coin is going to have a lot of traction behind it, you already know that cryptos can reach scales of dozens and hundreds of billions of dollars, then it's kind of apparent that you want to avoid jolting the market when unnecessary.
Okay, that's some good insight, man. Thank you so much for that. I want to talk about this. So then we'll get into the markets here. But Luke, your homeland, the largest stock exchange, just approved the first Bitcoin spot ETF. I'm curious, Luke, what's the sentiment down there in Australia? And I know people watching, they're gonna speculate, where are we gonna see a Kaspa ETF? Any insight into, do you know anyone at the Australian's largest stock exchange that perhaps you can maybe push them to do a Kaspa ETF?
Unfortunately, I don't know anyone at the ASX, so I can't offer any, off the record sort of information there. But honestly, seeing that type of behavior just gets me more excited for a potential future Kaspa ETF. So, I saw the news this morning, 8 hours ago, and I'm just ecstatic. Honestly, the sentiment from the locals there and all the people that are in our sort of Australian community is everyone's excited. It's big news. So.
I'm just curious. Does anybody here in studio have like hesitation when it comes to ETFs? Because I know most of us we're excited. Hey, we got more liquidity, more interest in the market. We have traditional investors that wouldn't stomach buying crypto through an exchange, and now they have the services here. But it kind of goes against what crypto was built on, was this decentralized peer-to-peer network. Do you guys think that it's a net positive for the ETF? I mean, I think it's a net positive, but I know there is a very polarizing opposite opinion to the ETFs. I mean, how do you guys feel about the ETFs here in America and internationally? Do you think it's kind of a distraction or good? Let's start with you, Shai.
I don't have any hard opinion here or there, because I don't like to be very opinionated about stuff I haven't researched very thoroughly. But on the surface, it seems to me like a positive thing. We want to draw people into crypto. A lot of people are suspicious about crypto, and it's not just because it's this new alien tech and they're afraid of different things. It's because the crypto industry has a lot of problems. There are a lot of stories about either scams or just things that didn't pan out because of like having too large a technical debt and being irresponsible in how you conduct yourself. So we need to rebuild trust between the general world and crypto. Now, people think of crypto as this huge industry, but crypto is tiny. Mm-hmm. Crypto right now is mostly gambling retailers and some VCs that either try to quickly monetize on this, or in the rarer cases, really try to push the technology forward. And if this technology is ever to be meaningful to the world, we need people from outside to gain or regain trust. And having this bridge between TradFi and crypto that can stabilize crypto and can make people outside more affectionate toward crypto, I think is a great sentiment.
Mm-hmm. Yeah, I agree. Yeah,
Do you agree, Chad?
Yeah, there's already institutional investment happening within crypto, and I think within Kaspa as well. I think like Shai nailed it perfectly. When you have an innovative product, you can't just run out and tell everyone to buy it. You sort of have to like bring it alongside something else that they're familiar with and show them the bridge to it. And so I think that's where ETFs or any, real world asset, DPIN, like all these scenarios are going to just familiarize people with the product, with something they're already familiar with. Because you can't just come right out and go, buy crypto. Blockchain's the answer to solve all our problems. So you create these scenarios, and ETFs are just one of them that brings TradFi and crypto together. And it's only going to propel the movement towards real world assets and the whole DePIN market. I think it's going to be a great thing. You're still going to have issues with centralization. People are still going to be greedy. People are still going to run away with money. That's not going to change. But for us, we just think, wow, this is a great option for creating more adoption. Right?
Do you kind of agree, Luke, or are you on the other side of this?
I think I'm a bit cautious, but I think to sort of get on the same page as what Chad was just saying, like if we can make it easier for people to get into crypto, I think that's a net positive. Because when you talk to people who don't know crypto, or they've just heard about it off their Uber driver who said, yeah, that Bitcoin, yeah, it's so difficult to get in. It's like, where do I buy? What do I buy? How do I buy? So if you have a familiar platform, and you can go through sort of the traditional method, then I think it really is positive. So,
yeah, I do think there are some areas of concern, especially if you look at the track history of these asset managers influencing markets, manipulating markets, and using their financial muscle to get their way. Maybe them holding a certain or a giant proportion of tokens could be used against a network. I think that's kind of like the worst case scenario. Obviously when it comes to Bitcoin, to compromise a network as a big holder, you're compromising yourself. So it's usually, that's kind of like the why would you mess with it as if you're a miner, why would you attack the network if you spent, billions of dollars or millions of dollars, mining. So I think it's always that, but it's always makes for an interesting discussion.
I think that actually in crypto, people with a lot of money it's much easier for them to influence the markets than if it's on the stock exchange. Because, I know people in the market don't like regulations. But like them or don't like them, they make it harder to manipulate the market.
Yeah.
And you can do stuff that's extremely insane on crypto that it's totally legal. You can just do it for the kicks. And I don't really buy into they don't want to disrupt the economy they're invested into, because you can say the same thing about dollars. I mean, Barney Madoff didn't want to create this subprime mortgage crisis. He didn't want to break the economy. He just didn't care, and he was irresponsible. Yeah. And in crypto, it's much easier to don't care and be responsible and not face consequences. So I don't find this a very strong argument.
I'm a little more on the conspiracy theory side, right? I really am. And I look back at what happened in the 30s and the 70s, where we got off the gold standard and the government pretty much said, yeah, if you hold gold, you got to turn it in. So my fear is, right, the ETFs right now hold around 5% of the total supply of Bitcoin. What is that number going to grow to? And if Bitcoin truly starts to kind of go head to head with the dollar, and you're talking about an entire country, the most powerful country over the last 100 years, crumbling because people, let's just say people start using cryptocurrencies or Bitcoin or whatever the case may be. We're already seeing de-dollarization globally, if that gets to a point where it's like do or die, I don't put it past the government to go to these ETF issuers like BlackRock, Fidelity, and say, yeah, you're going to need to hand that Bitcoin over. Can they tank the entire network? Of course, I am being a little conspiratorial here.
Well,
but
why did they initially stop the redemptions of gold? Is because foreign nations were making
they didn't have enough gold to back the
paper. They were making a run on the commodity, the underlying asset. So if Bitcoin and crypto becomes international and held by nation states, or just giant companies, if there's a big run on Bitcoin through the ETFs, perhaps they try to shut that down and say, hey, look, you can't redeem your Bitcoin, or you can't sell your ETF, or we're going to confiscate it. It's definitely something that's historically been done, as you mentioned, and so it's I don't know.
That's definitely one of my fears. What is not one of my fears is our channel sponsor. Today's show is partly brought to you by CAMS Blue Wire Technology. You want to learn how CAMS can help you scale your business, maximize your networking, IT, and cybersecurity. They are the one company to go with. And if it wasn't for them, the crystal clear 4K stream you're watching on your TV right now would not be possible. So big shout out to them. If you want to learn more, click the link in the description of this video. I'm going to send it over to Robin. We're going to take a look at the markets, and then we're going to come back and talk about a very interesting point that has stumped a lot of the smartest people in our space that Kaspa potentially has solved. So first, we're going to take a look at the markets. Robin?
All right. So you got Bitcoin coming in at 66.5. And so a little rally than we were this morning. We went down and tested the 65K mark. Pretty big psychological number. Obviously, a nice round number, 65,000. Bounced off of there. So making some traction. Will we cross 67? We're right there. And then taking a look at the 1 week, you can see that we did sell off where we were at the start of last week. And then taking a look at the 1 month, consolidation. So this is a 1 month consolidation. We have seen historically Bitcoin consolidate for 2 months at a time in this recent bull market run, where we went from 20,000 up to that 60, 70,000. Typically, once we got to a new price range, we would consolidate for about 2 months on average. So is there another month of 65 to 70K Bitcoin? Perhaps. Short-term history says there is. Taking a look at the broader altcoin markets, you'll see that XRP is up 5.36%.
Wow.
Just on the 24 hours. Really the only
Aren't stablecoins supposed to be stable?
Stop it. All right, so XRP. Now for this is, I think, an overreaction.
Rock was boiling.
You had in the SEC news circles, I forget the name of the guy's position, but he was
the lead chief legal officer for crypto.
Yeah,
talking about the SEC guy.
So yeah, so he was the resident crypto. There you go. So he was the crypto expert for the SEC. He stepped down and joined another crypto company. And so, with the resignation of the SEC, obviously the court case for XRP is nearing its end, or we're expecting the judge to give a final ruling and perhaps some fines as well. And hey, you know what? Shake up with the crypto division there in the SEC. And, well, the people that hold XRP have gone loony and started buying. So there you go. Now, we did have a little bit more sell-off in the markets, though. A lot more red. You got Zinc, Injective, Notcoin, and Oasis all down over 10%. These are all tokens that have rallied pretty heavily as of in the last 30 days. And so just, I think, natural pullback. But none of the big tokens here, none of the top 10 tokens in the that are down. Everything else. So that's all I got there, brother.
I wanted to ask. I saw a lot of comments. Where's Wolfie? He's on the thumbnail.
Mm-hmm.
Is he still?
Actually, he just landed. He's in the hotel, but he may actually come in on the live stream.
Okay.
So I told him to tune in and say hi. So he'll probably show up, but we will see him on the show.
There might be some magic here, because from my understanding, Wolfie and Shai have never met in person.
We have never met in person.
And Shai was super excited, and then I think the flight got delayed or whatever happened. But I got good news. If you're a Kaspa fan, later this week, we're going to do an exclusive Kaspa-only video. where we're going to sit down with Shai, Luke, Wolfie, and Chad, and we're going to talk only about Kaspa, the future, KRC, what's happening in the ecosystem, some alpha that you're not going to want to miss. So make sure you subscribe to the channel and have your notification bells on, because once that video goes live, you're going to want to watch it. It's going to be really, really good. Now, I want to talk about something that happens in traditional markets, right? High frequency trading. And it's kind of the crypto version. You have MEV, right? Maximum extractable value. This is where when you go in to put a trade in, these bots go in there, snipe it at the price you were going to get at, and the ultimate price you get is maybe a couple cents higher. You see this in high frequency trading in the stock market, but the amount that they do is so large that even a penny or half a cent multiplied by tens and hundreds of millions of dollars just by kind of arbitraging, but not really, but kind of screwing the retail over. This is what they do. And this is something that some of the brightest minds in crypto have been trying to fix with these MEV sandwich bots. So this article here, Solana Sandwich Bot makes $30 million from MEV arbitrage in 2 months. I thought I had some highlight, but I didn't. And
We're
then
in the wrong business, bro.
no crap, right? And so I want to share this tweet or post here from Shai. So he reposted this from Anatoly, to which Anatoly says, solution MEV is simple. Every user has their own block producer and make their own blocks. But Shai, you tweeted this. You said sub 100 millisecond slots with worldwide replication is impossible. Yeah, except Kaspa already does that flawlessly on its testnet with nodes running on $100 machines. MEV is toast. I don't think MEV is good for retail. I don't think MEV is good for anyone except these bots that make a lot of money. But Shai, can you maybe expand on this a little more and how Kaspa is truly uniquely solving this MEV problem that a lot of people haven't figured out how to solve?
Yeah, so I think as a start, I will describe what MEV is a bit differently, and maybe a bit more generally. MEV is any sort of situation where a miner could increase their value by selecting what transaction to include in clever ways, ways that are not known to users while they create the transactions. And why is that a problem? It's not just a problem because it creates all these trader bots, and there is like this entire philosophical discussion about, okay, so they extract value. Are they doing something wrong? Are they harming the market? And I think from my point of view, as someone who tries to design protocols, the main problem is that miners don't behave the way I expect them to behave, and this has consequences about how well my protocol is working. So even if you believe that if they extract this value, they should deserve this value because they've worked for it and they figure out how to get it, it still has detrimental effects that we want to get rid of. Now, I think I don't want to get into it a whole lot because it's Jonathan's work and he should be the one talking about it in depth. But I will say, well, first of all, as Anatoly said, the ideal unrealistic solution is that if everyone produces their own blocks, then you don't have MEV problem because everybody just contains their own transactions in their own blocks. Kaspa makes this much more realistic than other protocols because we have this very, very high BPS. So you would need a lot less hardware to be in the network. But what's really unique about Kaspa is the high parallelism. I'll be sorry if I'm a bit too technical, but the thing is that blocks are created at faster rates than they propagate. So you have a lot of blocks are created at the same time, and it only after a few more blocks are created, they are like consolidated. And if there are some conflicts among the blocks, then it is only resolved a bit later. And because everything happens so fast, much faster than the speed of light of the internet, then by the time everything gets settled, a lot of information that wasn't available to the miner when they created the block becomes available. So what can you do with it? You could have the miners bid for the privilege to include a transaction. Now, if they can't extract any value from the transaction, they wouldn't pay any more than the fee. Right? They wouldn't pay anything, essentially. Maybe they say, I would agree to take a little less fee for the privilege to take the rest of the fee. But once you can extract value from a transaction, then you would be willing to pay more for it. And because everything happens so fast, you can't do stuff like, I'm going to look at all the other bits and outbid by a little bit, because things happen too fast. So miners are incentivized, and Yoni researched thoroughly the game theory of this. They are incentivized to pay as much as they think is reasonable to pay for including these transactions. So they're still able to extract value. That's not something you're going to get rid of. It's a part of the market dynamics. But instead of this entire thing going to the miner, it hits some equilibrium point when it's fairly shared between the miner and the users that created the transaction. So if there are 3 transactions that pay a total of $10, but I'm able to extract $100 from these transactions, then I would agree to pay the users 50, 70, $80 for the privilege. And then, yes, value is still extracted, but it's spread in a way that is like an equilibrium of how this effort should be shared and compensated.
That is very interesting. And so pretty much incentivize, or at least give some sort of incentive to the end user so they can make money with it too, versus just trying to get rid of it. Very interesting. I want to, by the way, anyone else have any thoughts on this before I move on from this conversation?
Can't go deeper than that.
No, I mean, that's.
I did want to ask the chat here just to get a little interaction for you guys. I got over 300 live viewers, and so I want to know how many people here are Kaspa fans, or if you're from the Kaspa community tuning in for the first time. Put a 1 in the chat if you're a big fan of Kaspa. Put a 2 in the chat if you don't know what we're talking about, which I find hard to believe, but. Put a 1 in the chat, see how many ones we get going here. And also, this helps support the channel, getting some little interaction in our chat as well.
I want to shift this conversation, and I'm happy we have 2 brand ambassadors and from Kaspa Marketing, because I want to talk about this. So Coinbase flags crypto talent drain from the U.S. amidst regulatory concerns. They noted a significant decline in U.S.-based crypto developers, down by 14 points over the past 5 years to just 26% today. Could we see a change in the guard? We know we have former and potentially future President Donald Trump. Some people call it pandering. Others call it he had a change of heart. But this is what he had to say at one of his rallies in Florida. Listen to this.
Well, I will end Joe Biden's war on crypto, and we will ensure that the future of crypto and the future of Bitcoin will be made in America. We're going to keep it right here, and a lot of it's going to be done right here in Florida, right?
I feel like, for some reason, I think like Trump thinks that we're going to put like a Made in America sticker on a Bitcoin. Brother, that's not how it works.
This block was made in America.
Go down to the Bitcoin store, buy some, yeah.
What do you mean I can't go to the Bitcoin store?
It's still pretty.
Where's the
pretty
Bitcoin
damn bullish.
factory?
I'm excited.
Yeah. So I guess I'll kind of throw it out there, and either one of you, Luke or Chad, you guys want to chime in here. But how important is the United States and getting some sort of clarity so you can market here, or you can do campaigns, or maybe you're already doing it, or maybe you're waiting. What are you guys' thoughts on the importance of needing the U.S. markets to come around to being more pro-crypto, more pro-innovation, and maybe through your ambassadorships and your marketing, maybe are there any issues that you've come across here in the U.S.? And I'll kind of throw it out there. Either one of you can chime in.
Yeah, well, interesting enough, it's not easy to buy Kaspa in North America. I mean, there's exchanges that do, but we've grown tremendously in a market where most of our community is. I mean, I would say we have a lot of people interested in the U.S. and Canada and whatnot, but a lot of our market is not there. The idea of wanting startups and developers and whatnot to be part of your local economy is awesome, and I think we need to promote that. What we can do is, and what we do here, and why we're even here, in Vegas, and we've been in Austin, we're heading over to Miami. We want to encourage more, local talent to join the ride, and we think Kaspa is a great opportunity for developers to jump on. And we've had 2 years of Rust development, and it's expanded the development team greatly. It's no longer just a few guys in one country. Now it's pretty spread out. So I think I think it's a need. We should figure out ways to increase the developer pool within every country you're in, and you can do that as an ambassador. You can do a meetup and you can share the technology and share where the opportunities are to jump into the GitHub and work on Rust. And even where I'm up in Canada. It's as far doxed as I'll go.
There you
go. But I work in a co-working space, and so I'm surrounded by people that are startups, and there's a couple developers there, and they're very intrigued by Kaspa on Rust. And so this one guy's like, I'm going to learn how to write in Rust because I want to jump into the Kaspa ecosystem. So that's just me being an ambassador, sharing about the project, and encouraging a startup in Canada to do a thing. So we got to do that. I don't know. I mean, Trump's an idiot. So obviously Bitcoin will not be made in America. And that's probably not only in Florida. But the whole idea of embracing cryptocurrency, we love that. And, obviously whoever says it, it's great. But it's a decentralized economy, and that's where the beauty of why Bitcoin is created. So I'm not too concerned about where most of the developers are coming from. Like, I'm happy to see a global energy of developers. It actually is doable now that it was never doable before without the internet. We can build stuff no matter where we are, and so we can have multiple teams in different countries, and it can still come back and help the local economy in different ways. So I don't know if I
anything thoughts you want to add to that, Luke?
No, I just think that seeing the collaboration from people all around the world is the most important thing about crypto, right? We're not just specific to one country, although obviously the local economy can benefit from it, and we have developers all over. So if they're in the States, then it's even better as well. But having that ability to just have people working on it from different countries is what makes crypto, right? Like, it's beautiful.
Our economies didn't grow because of a U.S.-centric political view.
Right.
It grew because we became a global economy. So if you want to close those doors, I think it's going back in time.
I agree. I think a lot of people look at the U.S. as the most liquid, deepest, lots of money. You got the dollar as a reserve currency. And so they see the U.S., the economy, the capital markets as an important piece of the puzzle for growth. But I might add, as Chad mentioned, and I 100% agree with him, look at the growth we've seen in crypto with what we're seeing here in the U.S. without the largest capital markets. Imagine the growth we're going to see and the acceleration we're going to see once the U.S. does become this, hey, we're okay with crypto, we like innovation. And so it's only going to benefit. But I agree with Chad, crypto is very global. So even if the U.S. came out and said cryptocurrencies are banned, Bitcoin won't die, Kaspa won't die, some altcoins probably will die, but other altcoins probably won't die. And so it's a very unique industry we're in, is that we're not tied to one government, one country, one set of rules. The true projects that are decentralized, and not all of them are decentralized, and that's okay, but the true ones that are, I think those ones are going to be the ones that shine, at least on a user level.
I did want to give a little shout out to the chat, though. I know we have a lot of new people here. Obviously, you guys might have found us through Twitter, but I want to give a little love to those of you that are new. And so to you, Kaspa Maxi, Kaspa Guru, Frankie Legend, Brainwash, Carlos, Kondanzi, Just P, Katafi, Mops, James, Mathis, AKU, Bernie. We got the Bubble Paxi, Adrian, Rocks the Kaspa, Pillar Pilates, yourself, Abo, Max, Raven 99, Ron, Hugo, Max, Dead Perch, Fud, Carlos, Rusty Bot, Max P, Tony, Crypto, Furno, and then you got NBA, Bless, Wanderer, 246 Joel, and Dippy J. And also, Dippy
wow, that was
J,
a long list.
That was. And Dippy J also said, who is the effing clown in the black shirt?
Which one?
We all have black shirts. Be more specific on which clown you're talking about.
I have a blue shirt.
I think people were offended by Chad calling Trump an idiot.
Yes.
I just want to say something about it. I'm going to say something contentious that you have to forgive me for bringing it up. But as an Israeli who saw what Trump had to say about October 7th, I have felt on my flesh how fast this guy is to throw anyone under the bus. If you think Trump's administration is going to treat Biden's administration better than crypto, maybe they will. I can't know. I don't pretend to know. I'm not an expert on US policies. But don't take this guy on his word because he's not trustworthy and he will throw anyone under the bus. If his speech is the only reason you think this guy is going to be good for crypto, then you're digging your own grave.
Yeah, I don't trust any politician. I just look at what's the better of the two bad options. That's the way I look at it. I want to go around and ask, Luke, what was the first cryptocurrency you ever bought?
The first cryptocurrency that I ever bought, I think it would have been probably Bitcoin.
Bitcoin?
Yeah.
Okay.
I think it was Bitcoin.
Chad?
Pivx.
Pivx?
Mm-hmm.
Mine was Cosmos.
Mm-hmm.
I bought Cosmos at, I think, $11. What about you, Shai?
Bitcoin. When I bought my first crypto, there was only Bitcoin.
Fair enough. You're the OG of OGs.
Yeah.
Yeah, I spent it all though.
Yeah. Not on pizzas, right?
No.
Okay, good.
I got a sub $200 Ethereum. And,
ETH was your first one?
yeah, then I sold it as soon as it moved like $20. I was like, what's going on here?
Guys, before we wrap up the show, I do want to give a couple special thank yous. Crick Cats with a $5 super chat said, massive fan of Kaspa. So happy to see the team on the best show in crypto.
Also,
Mastos
Jimmy just gave 20 gift memberships as well.
Well. Also, Crypto Pleb said, effing love Kaspa. I love you guys. We love you too, my friend. We love you too. Again, guys, these gentlemen will be here for another couple of days. We're going to bring them back tomorrow for a sit-down Kaspa-only content. We're going to talk about a lot of things in the ecosystem. Where is Kaspa headed? What's the marketing direction? Listings. Maybe we'll get some alpha drop. You do not want to miss that show, so make sure you are subscribed. And that'll do it for the show today. One more big thank you to the channel sponsor, Cam's Blue Wire Technology. If you want to learn how they can help your business scale and grow, visit bluewiretech.com. Before I do my patented finger tornado, by the way, guys, I'll explain to you what that is in here in a second. Any parting words before we kind of log off? Luke, I'll start with you first.
Kaspa is the future.
Kaspa is the future?
Bitcoin was Kaspa testnet.
Kaspa is the end game of proof of work.
Nice.
So you guys must like Kaspa.
What gave you the first hint?
Just a little
I
bit.
don't know. Your title does say knows a little bit about Kaspa. Find that hard.
For those of you first time here in Las Vegas, it's we have the world's largest strip club over here, right off the strip. So it's like a grocery store strip club.
Oh,
Wow.
So,
Speaking of grocery stores, you can go shop for groceries and you can go gamble all your paycheck too at the same place. It's pretty cool. Not really. That'll do it for the show today. Big thank you to all of the people that joined us for this special live show. And big thank you to our 3 in-guest studios. We appreciate them stopping by. And with that being said, so this is called the finger tornado. I go like this. First, I have to say the producer's name. I tornado, and then that gives them the clue to hit the credit button, and then that's how we get out of here.
you did that.
So everyone's great. Would you like to do an honorary finger tornado, Shai?
I would love to the finger tornado.
I knew I liked it from the beginning. So all you got to say is Rocco, and then tornado.
Rocco!
Bam! Look at that finger tornado, guys. Thank you so much for tuning in. It was an absolute blast. Make sure to tune into the channel. And again, big thank you to our guests. We love you guys. We'll see you tomorrow. Peace.
Sin City, crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin, it's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon, then to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado